Fintech. Let's talk about those stocks getting crushed lately, rebounding some today. PayPal, that's a fave, down more than 70% of its 52-week high. Others are down a lot as well. So, Pete, you own PayPal. Mizuho reiterates it today, buy, with $120, the price target. Let's throw up that stock, please. There it is. 120 bucks, Pete.
I'm not looking at... Yeah, I can't see the chart because of my situation here with the camera, but I can tell you I know that it's awful. I can show you that by just showing you my balance sheet of my positions. But this stock, you know, I think last quarter really was what changed it for me was the fact that I felt like the CEO and the company itself needed to be a lot more transparent than they were going in. And the disappointment that we all felt when we saw what the earnings actually looked like was just crushing. And obviously the stock got crushed based upon a lot of that as well. So I think that, you know, I'm giving them a little bit of time. We're going to see what things look like over the next quarter or so. But the acquisitions that they have made still are meaningful. I think when you look across at the company itself, they've done a really good job of positioning themselves. But they didn't do a good job of letting us know some of the issues that they were facing in the previous quarter or so. And I think that's something that did bother me a lot. And I know Jim Cramer felt the same way. We felt like we got the rug pulled out from under us when they actually reported the earnings that they did. So disappointment, yes. Still holding on to it, yes. But for how long? I'm going to tell you after the next earnings. Then I'll let you know.
Josh, this space has been just brutal. Affirm is down 86% from its high. PayPal 73, as we just said. Robinhood, if you want to lump it in there, 89. Coinbase 81. I'm sure you can find other ones too that you would consider to be a fintech that's gotten destroyed.
Yeah, I had a horrible trade experience with PayPal. I rode it to a double and then a round trip. I can't believe how bad, how quickly sentiment around this stock fell apart. They are not growing as fast as they were, but it's still a growth company. But this stock just became uninvestable overnight, and nobody gave me the memo. So don't take my opinion as gospel on this. But I would say we have way too many publicly traded fintechs, way too many venture-backed fintech startups waiting in the wings, trying to come public. Most of them are overlapping each other's business. Most of the problem here is that there's just not enough growth to go around for all of them. They're going to spend a ton of money sponsoring podcasts and buying stadium naming, and it's all really not going to result in much, considering that the amount they're spending for customer acquisition cannot be recouped realistically for years and years and years out into the future, and they don't have organic growth. So that's really what's plaguing these names. I don't see a resurgence anytime soon. And the last part of this is focus on the amount of money being spent by traditional finance companies. They are going crazy on technology. Morgan Stanley, Bank of America, Citi, JP Morgan Chase, they're not lying down. Like, they're not sitting there eating glue while these companies build apps. They're building apps of their own that are extremely competitive. And so that makes these stocks really, really tough to be a longer-term investor in. Maybe there's a good trading opportunity. I don't see it based on the technicals.
Weiss, I mean, I'm looking to see what the peak of the market cap was for this company. Because it's like $100 billion now.
$300 billion.
$300 billion. So 300. It was like so it was like bigger than Bank of America, right? And to me, it just almost underscores the craziness of this particular market cycle. That a company like PayPal, I mean, I'm not anything against PayPal, but you know what I'm saying? The way that stocks like that just shot up, big valuations, that it had a bigger market cap than Bank of America not sort that long ago.
Because you know, Bank of America looks at them, JP Morgan looks at them, and they say, hey, why do we need them in our backyard? We could spend, so you have these companies, and Josh is right, I spend a lot of time in private markets. I can't tell you how many fintech companies I look at that have the same model. So what these companies are doing, it's like the old Toys R Us. So Toys R Us had diapers they sold at a loss. It was loss leader, bring people in. And then they had other profitable, you know, products that they sold. But we saw what happened to them. These companies only have the diapers. So you can't tell one diaper from another diaper. So I'm just still bearish on it, been bearish on it for a while. Will continue to be that way.